They don't seem to add up very well. 90% jump in revenues and a 700% miss, if you will, or $153 loss there. What gives?
Yeah, look, firstly, thank you for having me. And, we're really proud of the results we were able to deliver over the last 12-month period, over 100% year-on-year growth on a constant currency basis. From the bottom line perspective, there were, many non-cash items, including the revaluation of our minority interest in the UK entity. So perversely, as we're more successful in the UK market, as that is mark to market, it does flow through the P&L. But from the EBIT perspective and a top line growth perspective, really proud of what we're able to deliver.
We talked about the North American market. That's really been growing for you over in the US. Why do you think, because customer growth, though, in Australia and New Zealand has slowed down? And do you see a reversal to that?
Yeah, so obviously we're older in our life cycle of the Australian market. Still seeing very strong top line growth as frequency does continue to accelerate in the Australian region. From a US perspective, we saw over 175% year-on-year growth, and now our largest contributing region. Naturally we're at far earlier stages in the growth curve of the US market. So we're seeing new customer acquisition, continue to deliver really strongly. And the frequency profile in North America is also following the same track that we've seen in Australia. So, while we're earlier in its life cycle, we are seeing the same trajectory in frequency growth that does really give us the confidence to keep investing into the curve based on the blueprint that we see in the Australian market.
Nick, I wanted to ask you about the deal, and I'm sure you've gotten a lot of questions on this. It was quite a big story when it hit the news feeds. I guess a two-part question. Why did you see the need to, sell the business? And if the transaction does not go through, what's plan B? What's the message to investors here?
Yeah, from our perspective, the focus from, day one has always been on aligning with, values and principles. We started Afterpay the way we did because there was a really strong opportunity to lean into the debit economy that was translating as a result of this shift predominantly by the millennial cohort. When you think about Square's business, it started from the same fundamentals as our company did, and that sentiment of economic empowerment has really shown in alignment of values and cultures and strategy complement, like the complementarity of our strategic direction. So the ability to leverage, millions of retailers on one side of the equation from Square's seller business and 70 million annual active consumers from the Cash App side of the equation to really accelerate our growth in North America will also fuel our global growth, given it's, retail-led and we're expanding with our big global partners. So, really excited about, the prospects of what was announced and the strategic direction in front of us.
Nick, I mean, that's perhaps one reason, but surely also with other companies out there like PayPal and Apple said to be getting into your space, is it just a race to have mass and scale?
Yeah, certainly, competition is, playing out at a far greater level now, given the prominence of buy now, pay later. What's been really important for us from day one was not just building a core payment platform, but was actually building this marketing engine that sits behind Afterpay, which is core to, how our retail partners assess the value we can drive them. We actually sent over 1 million leads a day to our retail partners over the course of the last 12 months, where consumers actually come to Afterpay to start their shopping journey. And that to us is a really critical component of our differentiation and ability not just to provide a payments infrastructure, but actually a marketing engine to this really highly valuable, hard to reach, millennial and Gen Z consumer.